Good afternoon, everybody, and welcome to Tech Talk here at MarketStream.live. My name is Joseph Cusick with the Cusick Group, and here we are to wrap up what's going on in the markets. Now, typically we would look at charts and option prices, but hey, let's just talk about the Fed because that's what's really been moving the markets today, and that's been the anticipation. Taking a look right now at the markets, bottom line is it's mixed. The stock market, the move for the last month and a half has basically just been based on expecting some real large GDP growth to ramp up in a major way in 2017. Well, the Fed came out today, and yes, they did raise rates by a quarter point, looking at a target of between now 50 basis points and 75 basis points going into 2017. But hey, points that was baked in. Their median economic projections for 2017 barely even moved based on what they were looking at even 6 months ago. With a GDP of 2.1% now expected versus 2%, I'm not seeing that as a big move at all or change in their perspective. I'm also seeing that they don't believe it's going to move any more than the projections that they've had for 2018 or even longer. One element of surprise, though, that I did see at this juncture is that the Fed's so-called dot plot, what I had mentioned this morning, this is basically where they're looking out forward and how many times they could potentially be raising rates. In 2017, it looks like they're going to be raising rates at least 3 more times. That's about one more time, maybe 1 or 2 more moves than what was anticipated. Right now, taking a look at this, the market's response is mixed at best. You see all the major averages down in their worst territory that we've seen so far in the trading session today, except for the fact that we see the dollar. The dollar continues to show some bullish tendencies, especially now after this hawkish dot plot. The treasury markets have continued to sell off. Right now, I don't think it's too prudent to read too much into this initial Fed move. But right now, it looks like the market did not like the tone of the hawkish dot plots and the statements that are coming out, even though Fed chairman's statements have been pretty bland and sticking to script, so to speak. Now, one question that you're going to have is whether or not the Fed is going to have to play catch up or whether the stock market is going to have to retrace its rally when we really start to get the details to the fiscal stimulus that is still completely unknown. I think that's going to be the driving force. And I think that roadmap as it's laid out is now going to answer a lot of that questions, and it will avail itself in 2017. Basically, from the latest interest rates decisions, as well as the economic projections that the Fed thinks, it's running a big risk markets are anticipating. I think this is a lot to bite off and chew and try to swallow at this juncture. So we're going to need to stew on this a little bit more. But the Fed is definitely taking more of a conservative approach, which is a big shift. Since their previous meetings, they would come out and they were pretty proactive, feeling good about things going forward. So with that being said, we're going to take our powder. We're going to keep it dry at this juncture. I want to see what the fallout is. And as a matter of fact, join me at 4:30 Eastern time. I'm going to be wrapping all of this up. I'm going to get under the hood. I'm going to talk about what's moving, talk about what the setups are for tomorrow going into the overnight action as well as the opening bell tomorrow. So we'll do all that at 4:30 Eastern time. Till then, have a great rest of the trading day, and we'll see you at 4:30 Eastern time here on MarketStream.live.